Hello, hello. How's everybody doing? Hope you can hear me okay. Let's get this sorted. Let's get this show on the road. Oh, didn't want to do that. Right, that's good. Let's go here. And then we'll go here. And then... Okay, good. So that gets rid of that. And we go to share, go to copy link. And then we'll go here. Okay, that's done. Oh. Get that out there as well on there, and we'll do that. And yeah, welcome everyone. Hope everyone's doing okay. Just going to do a quick bit of analysis, quick rundown. At the end, maybe ask some questions. Right, good, done. Perfect. Right, okay, let's have a look. Let's have a little look. See, right, let's kick off. Actually, let's start with gold. Welcome everyone. Hope everyone's doing all right. Hope you're having a good week so far. Have a quick look at gold. Gold has been pretty decent. It's been very kind to us over the last so far this year. It's been pretty decent. I've had one losing trade on it. That was last week on gold. So it continues to give profit. It's a good place to go for some quick money. Good instrument to trade. So this is the move down. We've had the pullback. I've put some fib extensions to the upside, so I'm looking at potential upside with Fed news this evening, 6 p.m. London time. Maybe see another pump up to the upside. Depends what kind of move we have to the downside first. So you notice that we've been consolidating over the last few days. This is a 4-hour time frame on gold. It's consolidating. It's waiting for the Fed. I've got two possible plays. I've got the move down to the trend line. Note here we have 2 points of contact. We are just looking for maybe 1725, 1720, 1715, 1710. Potential downside fib retracements to the downside. Note though we do have that lovely trend line, looking for it to maybe get down to about 1720 or so. Notice the bigger range has a 1716 area. So there's a couple of key levels, and because it's consolidating and it's not clear on what sort of a push down it's going to put in, it's until we see the move happen, it's hard to gauge. But if the move happens before the news, potentially we could just be seeing a bit of a correction to the downside before seeing a bounce up for some higher movement to the upside. It remains to be seen, but I've got upside potential is 1746. It's that 50% of this bigger range, because we didn't quite get there on the first push. So we had the first push up, then we had a 618 correction, 1700. Then we rallied and stalled. I was looking for this to actually test up there this week, but it didn't get up there. And it shows yesterday the price action, which has continued today. So it didn't quite get there. So 1746 to 1750 would be my upside targets, T1 and a T2 potentially. And then downside, we've got multiple levels to the downsides. So again, it just depends how price moves. So that's gold in a nutshell. The other one that you need to look at, because it's not doing too much, is the dollar index. So dollar index is sitting quite beautifully actually at the moment. We are not really doing too much, but just hovering just below 92. So that's key, because that's going to wait until the Fed news as well this evening. For this to decide which way it's going to go. This is the move, the last major swing up. This is a 4-hour chart. We've pulled back, retracement 38.2%. So our first major fib, which also has previous structure. as well. So that's quite nice how it's decided to just bounce off there beautifully. Again, looking at this previous structure, that works quite well. Will it spike up further? We might get like a 20, 30, 40 pips spike up to about the 764, about 92.20s. If that goes up, we might see a spike down on gold as well, with some nice correlation, one going up, one going down. So again, all to play for, and this is just consolidating in the similar fashion to what gold's currently doing. Let's move on to pound yen. Pound yen's been a really good trade for us. It's given us a couple of decent trades, profitable shorting at this key level. Again, I highlighted this last week, and I said to you, mark my words, within the Telegram channel. I said, Thursday, it's Thursday the 11th of March. Mark my words, we're gonna have a reaction off this level, because it's a 38.2 at 150, 145. We've been up and up and up and up and up, 8, 9, 10 weeks straight with no pullback at all. Whereas here you have the pullback, you have a move up, then you have a pullback to support. It creates structure. So support up, support up, support, support, and then this just went up. So there is a real imbalance. So this could topple over at any point because it has no support. There's no structural support. The last bit of structure is all the way down here at 142 area, 143, which is pretty much where it broke up and out from. So that's why I said look for this week to see some sort of bearish momentum to the downside. We've had some signs of that already, and we made some money off it. So I took that last range, that last 300 pip pullback, and then we did one final push up and extended to the 38.2. Just show you that in a bit more detail so it's not so messy. Got a lot going on with this chart because we've been actively trading it, so apologies if you can't make head nor tail of it. Let me just explain it to you very quickly. This is that move up. There's the 300 pip pullback, and then we've had a move up, so we've gone up to almost hit 152.30, likes a 30 number. Got a 161.8 extension, so watch the way it pulled back and then extended nicely. So then we were saying, okay, let's wait until next week, that was last week. Wait until Monday. So we started shorting it. As from Monday, we had first little pullback, 764 retracement, and then we shorted it, and that was a nice little move down, first move, and then we shorted it again when it came up to our entry. Got in again, left it overnight. I was quite confident to leave a trade running overnight in this particular instance to make our money for a 161 extension type move. Now we've gone up again to the 764, and there was a nice little setup for it to short, which one of our one-to-one traders, he did that, which is great, and he didn't need any guidance from me at all, which was even better, because it means that he did it on his own, which is great to see, really. And then there was another one-to-one trader that actually took the bounce and went long on this for a nice small sort of 20-30 pip scalp move, just a nice bounce up. So there's a couple of, again, using the 764 strategy. This is the bigger picture though. We are looking at a 764 strategy in play, looking for that further downside correction, which would give us an extension as well. If you take your fibs and said, okay, take that last swing high, last swing low, fib extensions, which is exactly how I've just plotted it there. That's just showing you how we look at it, how we view it here. So that gives us a fib extension. So T1 would be 38.2. If it breaks that, then we use our MT strategy, momentum strategy, on the break of that 38.2. Also, the trend line break would allow us for additional confluences. So we're looking for confluences, reasons to get in on this one for another run to the downside. And if it can break that 38.2, then I think a decent T1 would be a good 50 or so pips down to about 151, which is a 764, and then lower than that we'd look for the extension, 127 extension, which ties in really well with the previous structure that we broke up from around 150.45. That's the target. Also, that's the 38.2 of this major move up as well. One final thing to point out is this trend line was broken, tested, rejected, but then it finally broke. Now we've come up to test the underside of it. Now, as with any form of support and resistance, you're looking for it to do its job. So it did its job in providing support. First 2 points of contact gave us this trend line pretty much from the word go. So that's been our trend line since the start of this move up. So that's what makes it all the more relevant. and then we finally started to test it at the end of this move, which is when we were shorting. So that helped us to identify the exhaustion as well. We've broken through. Now this support, the reason it's now red and not green like this is because it's resistance. We've come up to test the underside, and it's resistance. So some simple price action. Just, you know, again, if you're unsure, you could just ask me, send me a message to my Telegram at ALX_TYW for anyone who's not in the Telegram channels that we're in, our groups. Moving on, dollar yen, very quickly. Same principle, same setup. Weekly, massive move up. No real, there is imbalance there, so there's no real structural support. So this could topple back over at any point. That's what we mean by the imbalance. It's just gone up in a straight line over the last sort of 4 weeks. That's the range. So then when we drilled down, we were able to short this one as well yesterday, and that was an additional trade that we took on top of the pound yen. Shorted it, really nice. So there was money being made there as well. It was this move off the 38.2, that weekly 38.2. So we had the first move down, we had a corrective push up, and then I said, okay, let's look at getting in on this, and we did. We got in at I think it was around 109.14, which is about here, looking for a break of the 38.2 for the momentum to take it down. And based on this range, based on this price action, this one here, let me just show this again. Let's put a 618 on here as well, just to give you some idea, so it's less confusing. So these are the fib levels that I use. Let's just put one on there. There we go, here, 108.70. My first major T1 was in actual fact 108.60, and that's still valid because we haven't taken out the last swing high. So we've got swing high here, the all-time high, and we've got this one as a lower high around that resistance here. Now we've come up to test it again, 1, 2, 3. Based on this range, now this is a 764 pullback. So 764 strategies coming into play again here. So we are looking for downside, and this time looking for an extension, looking for not only this to be taken out, but ideally if we can do that and see that, we would look for something like this, measure this move here. So it's about using fibs in a dynamic manner, which means that we are basically saying, okay, it's all very well charting the price up, which we've done. We've established that we've hit the 764 resistance, which also shows you previous structure being tested multiple times. Great, that's good, 764. But now you want to know where it wants to go down to the next point, in the next move. So we have to plot the fibs again. So we do away with these ones because these ones have served their purpose. We've charted that move up, so we get rid of them. So leave that. Now we're focused on this. And again, 109.25 touched it. The major weekly 38.2 fib, that big old range. Come up again, tested it. That's powerful for another move down, another step down. Again, I would be looking for at least a 764, which is 108.88. And then if it can break down, we're looking for down here somewhere, which is fib extensions that ties in a 161 ideally, or 127, anywhere down here, which ties in nicely with this bigger picture, which is the range that we're in at the moment. This is the range around price action on dollar yen. So it's gone up to retest like a double top, made a new high, and then it failed yesterday. So we caught this move, made our money. It's gone up again. We can potentially repeat this trade and make our money again. Just waiting to see what happens regarding the dollar this evening. So that may not actually do much until the Fed news comes out, but that's what I'm saying. I don't want to be going long. I know it's bullish overall, bigger picture, but I do feel we are consolidating with some exhaustion, and I would like to see at least some more testing to the downside to really pay its respects to that major 38.2 fib. It has acknowledged it already in terms of testing it once, twice, 3 times, 4 times now. Let's see if it can just do its job and hold to the downside. And see further downside still to come. I'm going to just get rid of these fib levels as well, just clean it up a little bit, because otherwise again it gets a little bit confusing having too many. There is method to the madness. So we'll leave that like that. I'll leave my 764 in focus as well. Pound dollar, just want to quickly highlight that. Pound dollar's nice because we have got, let's have a look at this. We've got here the fib extensions of that last swing high. Now, if we do break down and we do fell on pound, and we see some, tomorrow we have the Fed new, the Bank of England news, pretty much like the Fed news tonight. We have the Bank of England news at 12 o'clock lunchtime, London time, which is the news regarding the Bank of England interest rates, UK interest rates. It's the same stuff, same information. So bear that in mind. This will probably make some proper movements tomorrow. Same with pound yen, might see some proper movements tomorrow after lunch. I think for sure we'll get some action. So we'll see what sort of action it does. But two possible outcomes here: a rally back up because it's bullish to go with the trend. So a rally back up, then look for 140, 130 area. Look for that 764 to the upside. Now, if for whatever reason there's some surprises, or they want to do a bit of a stop hunt, or there's a clear out, or maybe the market sells off first to only then be bought up with the news, you just wait and see what happens. But basically, if it does drop, then I would look for some form of divergence and the selling pressure to actually take this back down to 135 area, 134.89. So 135 would make for a decent round number to test previous structure. So again, that's about 400 pips. It's a decent sell-off. So could see that this month. Could just see a continuation in terms of a correction to the downside. But weekly does suggest that we're just going to maintain the bullish structure and bullish course, bullish momentum. So as I say, unless there's some surprises tomorrow with the news, this will certainly dictate what happens next. Bigger picture with pound dollar. So I just wanted to highlight that. Move on to euro dollar, because people have been asking me about that. To be honest, it's not really doing a great deal. It's kind of dragging its heels, and this is drilling down to an hour time frame. There's not really much going on. So if we go right up to like a daily, you can see this is the massive move, massive range, very much being dictated to us by what is going on with the dollar and the dollar index. You can see that we've gone down and almost tapped the 76.4 of this little range that we're in. I say little, but it's still from 119.90 area, just shy of $1.20, down to 118.35. That's still a good 160 odd pips, about 160 pip range. That's pretty decent for euro dollar. For anyone who trades euro dollar, that's quite a good range, isn't it? Just highlighting the movement that's brought us to here right now. We've basically gone down. We've pulled back to the 76.4. So this is an Elliott wave move potential, because this is your wave 1. And your wave 2 correction is looking for a pullback to about the 76.4. So we get caught in this area here, just shy of it. So that's a 764 pullback. So wave 1, wave 2. Your wave 3 then looks for the fib extension, the 161 fib extension of this move, which is taking it down to about 117.72. It likes the 80 number, it likes the 20 number. I'd round it up to about 80, 117.80 area. Get it down to about there. That'll work quite nicely. What's above there? 118 round number. It's a good target area. So not only see a break here, but maybe a little pullback and then a drop. That would be quite nice. I'll put fib extensions on this range as well, because I'm looking for further downside should it break down, just to get down here, clear out any stops, people trying to go long, possibly down to here, and then it decides that it wants to go up after that. Also note the bigger range as well, 116.94, 95. So 117 again. Gives us 118 and 117 some potential further downside. We'll see if it finds any structural support here and goes long or not. Again, depends what the dollar's going to do, right? Depends the dollar index, but it's not really doing a great deal if you drill down to the smaller time frame. So it is clearly again waiting. Dollar CAD's the same thing. It's waiting on the Fed news, waiting on something that's going to affect the dollar. These are your fib extensions, looking for potential for 124 further downside fib extension, because it has tapped and broken below, gone back up, broken below, just rejecting those, so going up. So is this, are we going to see dollar strength, or will it just fail again? Because it hasn't taken out any of this price action as yet. It's threatening to do so. It's poised to do so. Will it actually spike up, or will it just fall? So further downside will tell us this, down to 123, 124 and then 123. Why? Again, if you look at the bigger time frames, you always have to do your top-down analysis, and you'll see that dollar CAD's been going down ever since we had the spike up from the pandemic. and that's just where we're at. Struggled to maintain its momentum with a weekly candle, bullish candle, 3-4 weeks ago. It rejected, tried to stay above the 76.4, but it didn't. It failed. So that was a clear sign that we were going back down to 120, to retest the lows at 124 and at 124.50. So there's further scope potential to the downside, just using those fib extensions, and they come into play with the previous structure as well down there. So that's what it looks like with dollar CAD. Again, if you are specifically looking at trading some of these pairs, do get in touch if you want to go over it, or you just want to share some charts in our trading group, chat group, and see what everyone else makes of it all. Get involved. It's important that you do that sometimes. It works well for some people, maybe not for others. So this is the New Zealand dollar, because New Zealand dollar has given us some good setups over the last few days as well. Well, since last week, to be fair, even the week before, we had again a decent correction to the downside. We haven't really had these decent corrections to the downside for a long time. Aussie dollar, New Zealand dollar, anyone who trades these knows that this has just been going up and up and up and up and up. So we consolidated and then bust up and out. So we did pump and then dump, wash and rinse kind of final move, and then it's corrected. And what was interesting is that we took it all out to the downside as well. So it potentially cleared stops to the upside, liquidity grabbing, stops to the downside, liquidity grabbing. Now it's like, what next? Where's it going to go? Because it has created a nice range. Higher highs, lower lows. Right now we just got to play what's actually going on an intraday point of view. Allow it to go up to test that 38.2 in that previous structure. Perfect. Now curl back over. I'm looking for at least a 764, which is 7132. So again, this was a target area mentioned last week, rounded up to 7135 as a T1, and then your T2 is pretty much to come back down to these key levels down here, which is sitting at around 7060. Bigger picture is at 764, and also the fib extension, first major 127 extension. So a couple of downside targets, 7135 and 7060. See if it can just pump down again, subject to whatever is going to happen with the US tonight and US US related news. Now this one I wanted to bring people's attention to, because this is Euro New Zealand. It's at a key area, really interesting. I've been sharing it with my one-to-one traders during their one-to-one sessions, because it's just really nice. It's clean. It's done a great job. Pandemic spike up, almost hit $2 to €1. Almost did that. So you can see what they did there. Good profit to be had. That was a really good move. And then we've just given it all back. Now the sliding factor was down here. When we plot our fibs, I always say the 764 is the level, the fib that I'm interested in. There you see it sits at around 175. So around 175. So down here somewhere. If I just take them off, let's get rid of these. It's just to show you that we went down to around that level. Also, we had the previous structure, which is here. And then we bounced again. We bounced off it to sort of acknowledge that area, like a little double bottom. Then we went up. But that was short-lived, wasn't it? It was just an opportunity to sell back down into it. And it's just given it back and gone. And now we're at an area where historically it's been tested so many times over the last so many years. And so the interesting part with this is that we want to see this either find the traction, again, with 4 weeks ago seeing some bullish momentum with that bullish candle. Is that a reversal candle going to be enough? Providing we don't take it out and take the wick out to the downside, then this has traction to pull back to like a 50%, a 618 or a 764 of this little type move here. So, come here, drop back down here about 76% down to about here, and then go up. And go up to first target, which would give you a decent 1,000 pip range to play around with some bullish momentum. There is a certain amount of imbalance there that could be could be filled. Again, you could plot your fibs on the smaller time frames, drill down to something like that and explore that movement in terms of where can we take it up to. Up to that 764 up there is almost in line with that 177 area of the 38.2, so that can make some multiple confluences, target area. somewhere up there. Even a previous little swing high could be arguably a decent area to trade for those of you that trade these highs and lows and trade order blocks and supply and demand zones and whatnot. You can see where price is putting little markers. That's the upside. Now the downside's massive, because the downside is like, if it breaks this area, the reason I wanted to highlight it is because I said, well, if it breaks, it'll be in free fall. There's nothing to stop it, really. You start testing these historical lows, which is huge, isn't it? So it's at key level. Where next will determine how many pips you can make. Because if we get a bullish reversal, some kind of trend up, there's scope there for 1,000 pips up. Same can be argued to the downside. You know, we're sitting at around 166, 157. That's about 900 pips to the downside for a fib extension. So plenty of scope both up or down. So I'm just waiting to see what happens here. Now the Kiwi is closely correlated with the Aussie, and they're closely correlated with what happens in terms of mining. You know, Chinese are over there in western parts of Australia mining for gold and things like that. So that's why it's heavily correlated and pegged with gold. And I'm going to do a correlation video, how important correlation is, and helping you identify certain correlations with certain instruments, like the Canadian dollar being pegged with and influenced heavily with what happens with oil, for example. I'm going to do a video on that maybe over the weekend and share that. But yeah, it's certainly interesting to watch, because sometimes we have euro dollar and euro yen going up while this has been going down. So we've had that bullish move on the euro dollar and yen with dollar weakness, but at the same time we've then seen this go down and see New Zealand and Aussie strength to the downside. So they have been correlating quite nicely overall. So that's, again, having that little understanding of how the fundamentals work. It's not about the numbers. It's about, you know, what's going on, what's pegged with what. You know, does gold does it influence, and if so, how and why? And just knowing that basic information will serve you well, because it adds to provide that extra layer to your trading, and also serves as an extra additional confluence, a very important confluence. You know, if you're just trading off a 1 minute chart, then maybe you don't care about any of this, which, you know, great, good for you. But I think if you're interested in being a trader and you're interested in the whole business, then you should understand the whole business from top to bottom, or at least have an overview of it. Final chart I want to share with you is the New Zealand gem, because we're short on this. We have 764 strategy in play. So we've gone up and we had this wash and rinse kind of a move, but then it reversed, it gave it all back. And it took it out as well. This is a daily chart, so this was a daily move, a pump and dump. And then the 2 days that preceded after this move, it proceeded to take it out, which for me was an interesting indication, if you like. Common sense is saying, look, it took it out, so it's made a new low, so forget this, we're looking for a reversal. So allowed it to go up. And New Zealand yen's very slow, it's a slow burner, but with New Zealand pairs, looking at New Zealand dollar, I thought I'd have a look at New Zealand yen as well as an additional. And I saw that we come up here and we're resting around this zone 764, looking for it to go down. I've plotted these additional fibs here to show you this move to the downside potential. You know, I've got it here, but I've got it in a little bit more detail, because I wanted to show you these fib levels, because these fibs are the ones which I'm interested in. Ultimately looking for a T1 down at 7738. So obviously my T1 is at 7740. And then breaking down below, take out the low, 100% retracement, just put in a new low, extend 7650. So 7650 was going to be my T2, but I'm feeling like, you know, if this is the setup that we're looking at, the beautiful thing about the 764 strategy is that it does take ideas from Elliott wave theories and principles. So wave 1, wave 2 pullback, wave 3 is normally the biggest move. So we're looking at a wave 3 extension to the 161. Which is at 75.93. So I've rounded it up as my T2 is 76. Done, simple. We have divergence as well here. Volume was going down all the while this was going up. So we're in short at 7825. Price is just loitering around that area. So it's one of those that you put on and you forget about it. The stop loss is at 65 as well. I mean, you could make it a bit higher, but I thought 25, 65, 40 pips is more than enough. That just accounts for this price action. If it's just going to mess around up here, then it's fine. I don't really want to be involved. But with this reversal on a daily reversal, and today looking bearish, and then we drill down, you know, it's got that scope, hasn't it, to potentially just drop and come back down into the mix. So I'm betting on that basically, and I'm looking for it to come down, and it's at key areas. I've allowed it to put in a justifiable retracement to 76.4. And that's it. So any questions? If not, this has been recorded, 30 minutes, done. We will upload this. You can just scroll through to the pairs that interest you just to revisit that information I've shared with you. And hopefully it will serve you well. And yeah, have a great day. And I'll be around later on this evening, because this evening is when we have the Fed news. And that will maybe cause some fireworks. Or maybe it will just fire blanks and it will just be, you know, just a bit of a wishy-washy, bit of chop fest, up bit, down a bit, you know, and just try and stop people out. And because of course there's a lot of traders are watching it, it goes without saying, but will they actually make something happen? I.e., will we see a move that we can actually tangibly recognise and get our teeth into, you know? So again, I don't put too much emphasis on news. I'd rather let the news play and thereby allowing it to then let the dust settle, and then we can trade. So yeah, have a good day, and thanks for joining us, everybody. And yeah, let's have a look. Any conversation, anything in the Zoom? You appreciate the analysis, answered everything, covering lots. That's good. Yeah, so it's just good to give you a bit of organisation in terms of these. This is the watch list. These are the pairs I'm going to do, and then we'll reel them off in order of what we're saying, so that way you can easily scroll through all of the video and just get to the points where you want to, the bits that are relevant to you, because you don't necessarily have to trade everything. But I think sometimes it's good just to look at how we view the market and how we analyse the market, and how the fibs are heavily involved, and justify, and justifiably so, why we use them and why they are so accurate as well. They just work. And yeah, great. So have a good day and enjoy the rest of the afternoon. Bye for now.